Hello, being dynamic is what OEMs have always been good at, but is this still the case? With fast-changing developments in consumer behavior and service expectations, ever more strict regulation, innovation in mobility, electrification, the digital revolution, and global dynamics in supply chain, OEMs need to reconsider their business model. This is the session OEMs preparing for the next fleet and mobility frontier. Ladies and gentlemen, let me welcome my panel. Mark Howlett, Head of Fleet and Remarketing at Kia Motors Europe. Miguel Fonseca, Senior Vice President at Toyota Motor Europe. Martin Jaan, Board Member for Sales and Marketing at Škoda. Gentlemen, welcome. Welcome to the Global Fleet Conference. Let's kick off. Martin, why will it be an excellent year for global fleet sales?
I think because we are now hoping, and then actually we are pretty sure that due to vaccination, the markets will come back. I think we will be coming back to normal life. I think that Europe is making very good progress with vaccination, so we can expect that after the summer at the latest, people will be driving more, people will be returning to office. I think that we are already tired of the never-ending lockdown, and they will be using their company cars more. We will see more and more business trips coming back, so we really expect a very strong rebound in corporate purchases, including fleet.
Mark, compared to the two other panel members, Kia can still be considered as an important fleet challenger. Do you also see strong growth opportunities across the globe?
We do, and particularly following the rebounding of the economy after the whole COVID pandemic sort of tails off, we see lots of opportunities, particularly in the electrified space, where there's real traction in plug-in hybrids and BEV technology right now. And particularly regions like Europe are really embracing this new technology. So we see lots of opportunities, and we will be there to support our customers where they hopefully have some upturn in economic prospects in the second half of the year.
Miguel Fonseca, let's look a little bit beyond Europe. Which regions will thrive and why in terms of global sales?
Well, globally, we agree with the diagnostic that was made so far. We believe that the rebound will happen, and also we believe that fleets will have progressively a different role going forward, more in relation to be associated with the foundation of fleet services or mobility services, more specifically, enabling other types of mobility across the globe. And we believe that Europe and China are actually very, very open towards this services industry that is now opening, and we believe that the US will follow suit. But other regions are also quite dynamic, like Latin America, for instance, and Asia Pacific, even outside China. They are also very active. So we do believe there is scope for transformation of the industry together with the expected rebound.
Okay. Mr. Jaan, Martin Jaan of Škoda, you also have had responsibilities across the globe. Before that you came back to Europe, you were based in China. How do you evaluate the regions and then the global sales evolution that you are seeing?
Well, when we speak about fleet sales or corporate sales, then Europe is still the strongest market. China is the biggest market in the world in terms of cars, but the fleet sales is relatively limited to some channels like police cars or taxi cars. and the user choose a fleet as we know it from Europe virtually does not exist. And also the US market is rather limited. So I would say that Europe is still the strongest fleet market, and that's also where we focus, and the European market will rebound. The Chinese market did rebound already. We have seen that China got the COVID-19 under control much faster than other regions, and prevented the second or third wave. So the Chinese market in general is developing very positively, but it's not so relevant for fleet. Europe is definitely our biggest focus, and then I think that South America is also important, but the South American markets are not yet enjoying the rebound as much as we hope in Europe.
Mark, we need to discuss, of course, also the topic of the chip shortage. What does this mean for production, deliveries, and fleet supply?
Well, it creates challenges in the supply chain, that's for sure. At Kia, we're good until the fourth quarter of this year. We have a good supply of product coming through. We're not as heavily impacted as some of our competitors, but we do see potential issues maybe further down the line if we can't, let's say, reorganize a bit the supply a bit further on. But for sure, it creates some challenges in the supply chain. But then on the other hand, a bit of supply constraint is good for residual values and the leasing contracts. So yeah, there's some spin-off benefits there. We've always been in this position of supply constraint at Kia, just through having quite some demand-led growth over recent years, and it's the same for all of those manufacturers, I think, that have moved early into the EV and alternative powertrain space. So this is, let's say, a secondary knock-on, but we've somehow had to manage this over a period already.
Okay, then I move to Miguel Fonseca. If Mark is saying that this is probably the same for all manufacturers that have taken an early step into electrification, also Toyota, of course, is a group where electrification plays a huge role. What is the impact of the chip shortage for you and your customers?
Well, Toyota, so far we could, maybe thanks to the preparation that we were forced to go through after the Fukushima incident, where we had to deal with a huge blackouts for a long time of certain components. We learned at that time how to put countermeasures in place to face these kind of adversities. And thanks to that, I think we could manage the teams in the purchasing area, supply chain, did an incredible job in activating those capabilities, and we have not suffered so far as much as the average industry. I'm not saying we didn't suffer, but I think we could, survive this period with relatively unscattered. In terms of electrification, we believe that on a global basis, we need to have the 4 pillars of electrification ready, and that is full hybrids, plug-in hybrids, battery electric vehicles, and fuel cells, because those technologies will be meeting the needs of the different customers around the globe, and they will be matching the development of the enablers such as renewable energy and infrastructure to charge the cars.
Yes.
And of course, in regions of the globe where the infrastructure will be behind, we need to deploy different types of technologies to continue to reduce the carbon footprint.
Okay.
So we believe that is the right approach, technology agnostic and diversified across the globe depending on each region's requirements.
We will come back, of course, on the evolution of the powertrain technology. Martin, within Volkswagen Group and Škoda in particular, what kind of issues do you see when it comes to the chip shortage that we have at the moment?
I have to say that for us it is quite a challenge. We use specific chips that are short in supply, so it's somehow affecting our production. I think until now we have been able to work around this and produce most of the cars that we have been planning. But it remains an issue for us. Of course, we are trying to, first of all, prioritize our electric vehicles. So even though they use the same chips, they will get a priority because even also for us, it's a priority, and we will try to manage the impact on our customers. So.
Okay. Miguel Fonseca, do you expect changes in the vehicle product, in the models, due to changing consumer behavior and an increased focus of fleet managers on efficient vehicle utilization? That they will opt perhaps no longer for those big SUVs, that they will diversify their fleets more and more?
Well, we believe especially in flexible forms of using different vehicles. So we should go away from fixed assets in certain fleets with customers and to flexible solutions in order to meet the needs of the customers. And in terms of vehicle specification, we believe that the connected platforms and the evolution of the services that we can render through connectivity will be dictating probably more will be reflecting the needs of our customers more than the equipment levels or version of the vehicle, etc. So flexibility on what type of asset you place in the market and connectivity will be the two evolutions, we believe, more than the hardware itself, other than the platform.
Martin Jahn, you were responsible for Volkswagen Group Fleet International and had, as mentioned, an executive role at one of Volkswagen's joint ventures in China. What is your idea about the evolution in model preference across the globe in the years to come?
I think what we see that companies still see a company car as an important benefit for their customers. It's not only a means of transportation; it's also something that they are giving their employees or their managers as a benefit. Therefore, they are interested in vehicles that have a good image, that are, we can say, fully loaded with equipment, especially safety equipment and driver assistance systems. Also full connectivity, that was a major trend, and we have basically seen an increasing demand in really high quality vehicles with a good extras. We see now, of course, a strong movement towards electric vehicles. We have just launched ENIAC, our first electric car on the MEB platform, which is highly demanded now in fleets, and customers are waiting for that. So we see a strong move to the electric mobility or to the plug-in hybrid. It's very much depending on the taxation situation and legislation in the respective countries. And we see that customers are still very much preferring leasing or ownership. I do not see a big, strong trend movement to car sharing or to really subscription models. Many companies are thinking about it, but the time has not come yet when this would become a mainstream.
Okay, and not even in Europe, you think?
I think it's moving, but still leasing and operational leasing is I mean the main trend, because as I said, for the user choosers, which is one of our most important segments, it's important for them to have their own car, which is also a benefit. So it's not just a transportation means. So I think in the user chooser area, maybe the people would like to have more flexibility, to have access to more brands, or to have access more models, to have some exchangeability, but I don't think that the corporations would just switch to some car sharing model. I don't think that would be practical.
Mm-hmm. Mark, what is the outlook of the powertrain mix within fleets, ICEs versus new powertrains, alternative powertrains? How do you see that?
Well, I think it's moving in one direction, and that's towards the BEV technology currently. We were listening to quite many interesting discussions with ambitious targets in the leasing sector also to electrify the fleets. Kia has made a lot of progress, and some of our competitors, also early adopters of BEV technology, have also made good progress in the user-chooser space because of electrified products, and we see this momentum continuing to go in this direction. We're all on the hook for a CO2 target as well by the European Parliament, which we cannot forget. So the incentives are there at all levels. But the technology really is impressive, and if you get the chance to drive some of these new innovative EVs, then for sure you will be, I think, convinced that it's the way forward.
Miguel, if I'm correctly informed, Toyota sold already more than 17 million EVs until today. You are also planning 70 EVs by 2025, of which 15 battery electric vehicles. And you mentioned that you expect that your sales mix will be 90% electrified in Europe by 2025. In what parts of the globe do you expect an increased rate of electrification? And even more important for the audience, will you be able to deliver those EVs in time with the chip shortage?
Well, just thank you for the question. Just clarifying, we sold 70 million, not EVs, electrified vehicles, the large majority full hybrid vehicles. I think it's important to clarify that. And then in the 70 models that you correctly referred in Europe by 2025, 15 are battery electric vehicles, and the remaining are plug-in hybrids and full hybrid vehicles. So just to clarify, and indeed, we believe, as I said before, we believe that undoubtedly battery electric vehicles will grow because we need zero emission vehicles tailpipe in order to meet the aspirations towards carbon neutrality and also the regulations. But we also believe that the enablers, pragmatically, will not be there for everyone to make everyone's life practical as this BEV mix grows. And in order to provide mobility for all without leaving anybody behind, in particular the people with the lower purchasing acquisition power that live in areas which have more restriction, like apartments or buildings without garages and difficult access to street parking with a plug. Even by 2030, we don't see that problem being resolved all over Europe, let alone the rest of the world. So we believe that that's why we will have a mix of about 35 to 40% of battery electric vehicles by 2030, and about 10 to 15% fuel cell and plug-in to complement, and the remainder will be still full hybrid in the next generations, progressively more efficient to contribute to the what is we hope to be amongst the leaders in terms of CO2 performance. We don't want to be arrogant there because we cannot read the plans of everyone, but we will be doing our utmost to remain leaders in terms of CO2 emissions.
A quick question still for you, Miguel. Why do you stick with that hybrid technology, which by fleet managers is more and more seen as the worst of two worlds instead of the best of two worlds?
Yeah, that's a provocative question. We see actually hybrid today is making Toyota leader in CO2 emissions in Europe. If you remove the credits, you have the pure tailpipe emissions. Toyota is number one. So how can the worst technology be the one that provides leadership? So I think the numbers speak for themselves. And also, as I said, ZEV will grow, but the non-ZEV portion of the portfolio should be as efficient as possible. And that is provided by full hybrid technology. That's Toyota's vision.
Okay. Martin Jaan, Volkswagen invests almost $20 billion in EV by 2025 and expects BEVs to account for 70% of sales in Europe and 50% in the US and China by 2030. Do you believe that the first adopters will be the fleet owners, the fleet managers?
So as you rightly said, we are fully betting on the BEV technology. We are investing in the BEV production and in many new models. We want to have basically the full range electrified, different brand at different pace. I have to say Volkswagen will probably electrify faster than Skoda, because Skoda is also serving some markets that will not electrify so quickly, like Russia or North Africa or India. So there will be a different pace, but on average, I believe that the 70% by 2030 is the right amount for Europe. And I think that that fleets will be following this path. Maybe the fleet will be even faster. I think wherever possible, the companies will be buying BEVs. Of course, there are some vehicles or some professions who will still need a combustion engine for whatever reason, maybe operating more in the mountains or closer to forest and then or something like that. But I would say that the majority of cars, especially in the city areas, will move to BEV very quickly, because we will also improve the quality of the cars, improve the range, improve the connectivity. So I think after 2025, the BEVs will be actually better cars than many ICE cars, and that would speed up this development.
Also, when it comes to TCO, you think that after 2025, that probably BEVs will be more attractive than ICE vehicles in most of the countries?
I think even today it depends on your calculation. It very much depends on residual value, which is still difficult to estimate. But I think that the cost of the BEV cars will go down, and at the same time, the cost of combustion engine will go up, especially after the introduction of EU7 emission standards. The price of the combustion engine cars will dramatically increase, and as the range improves and the connectivity of the electric car, when we create the right environment for charging and managing the car from your smartphone device, people will start preferring the BEV vehicles to combustion engine vehicles.
Okay. Mark, when will hydrogen be the technology of choice for fleets? We see that more and more car manufacturers are also investing in that technology. There are some questions about the relevance today for passenger cars, but what is your opinion? When can we expect that this technology will really break through also for passenger cars?
I think we still have some way to go. Yeah, there's still a lot of mileage in the plug-in hybrids and battery electric vehicles as we see them coming through today. There's a much broader range of options, even this year versus last year in the BEV space. So there's still a lot of mileage in BEV, I think. We see hydrogen being employed in HGV sectors and a lot of the heavier industries. But for the smaller cars, I think there's still some years for us to wait until it really breaks through.
Mm-hmm. Okay. Miguel Fonseca, we already touched a little bit upon new mobility. How is the emergence of smart mobility, new mobility, shared mobility affecting your vehicle sales business strategy?
I have to say that in terms of vehicle sales, the relevance is very small today in terms of shared mobility. However, clearly, there is a learning path to be acquired, and the efforts today will be the seeds for the future. So we don't see, for instance, as it was mentioned before, shared vehicles today being extremely relevant as a business. It's a fact. However, there are solutions required by consumers to use vehicles flexibly for certain societal needs. that require flexibility and today are not being met by nobody. So we are paying attention to those developments, and so we are investing in the technology that will be able to enable us to provide those services, like elderly people, securing the mobility of people that cannot drive any longer but cannot use regular public transportation services, for children in a more complex mobility environment. So there are many types of services that are required by society and will be more so in the future, and we need to develop the technology today to meet those needs in the future, and this is what we are doing.
Okay. Martin-Jan, how do you envision your role in the changing mobility ecosystem where technology and connectivity play a crucial role?
Yeah, I think we as a car manufacturer have to do much more for the whole ecosystem, how the car is used, especially with regards to the electric vehicles, because the whole topic of charging is different than just refueling the combustion engine car. So I think first of all we have to provide good charging solutions, so that the corporate clients have easy access to charging with our tools. I think we also have to develop the right tools, the apps for the drivers, but also the ecosystem for the fleet managers that would make the ordering and usage of the electric cars easier. And I think we can also think about, and we are thinking about, corporate car sharing solutions. I can imagine that corporations would have a tendency to use some sort of a corporate car sharing system for its employees, which will be easier and make more sense with the better electric vehicles, because you can connect it with the charging and with other things. So I think we will get more into the whole ecosystem and the services with the electric vehicles than we had it with the combustion engine cars.
Okay. Mark, what is your main tip for global and international fleet managers trying to harmonize their OEM portfolio across the globe, knowing, for example, that they are perhaps present in countries where you or other car manufacturers are not present?
Well, this is the challenge for the procurement manager, right? So he has to make sure that he has a group of suppliers that can cater to his needs on the global scale. And I think the bigger players in the industry, our own group, the VW Group, Toyota, just the few of us that are representing here today, can tick quite many boxes throughout the globe. But it's not just about having a presence, it's also about having this long-term perspective on the product development as well. So if you can find the right partner for the right geography, with the right pipeline of products, then you're on the right track.
Okay. Martin, sometimes we hear that car manufacturers are big lock institutions, and that now in this rapidly changing world, that perhaps they are not fast enough in going with the trends. What is your reaction on that?
Yeah, that is very true. We hear that too, and we also say it to our bosses and to our colleagues. We are not the fastest industry, right? Also because of our production cycle, it takes many years to develop a car, and then you have to produce it because of the depreciation and high capital costs. So we are unfortunately or fortunately different industry from tech enterprises and from startups, because we also have bigger responsibility for the safety of the car and so on. But we have to change. I think if I can speak for Volkswagen or Skoda, we are trying to learn from our mistakes, and we are trying to become smarter. We are investing into software development, into the production of battery cells and batteries. So we are really going through the transformation, which is painful. The pain is now strengthened by the COVID situation. Mm-hmm. But I can say that automotive industry, and that's true for all the car manufacturers, is really going through, I would say, the most challenging times ever. And we have to change. We have to become faster and more agile.
Thank you very much for that message. Gentlemen, we have to close this executive panel. I wish you and your companies a bright future and plenty of global fleet customers. Thank you very much.